Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 277 on July 1st, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on SoundHound AI Inc., Snap Inc., and Pinterest Inc., and we discuss three new trades on EOS Energy Enterprises, Uber Technologies, and the United States Steel Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, with a combination of videos and live coaching calls. So if you're ready to take your trading to the next level, send me an email and let's schedule a phone call. Now, the equity markets closed 2% higher on Friday before this upcoming shortened holiday trading week. The Dow Jones Industrial Average picked up 680 points, closing at 34,407 points. The S&P 500 index gained 102 points, ending the week at 4,450 points. And now it's time for the topic of the week. The topic of the week this week is the order of operations. Now, if you instantly thought of PEMDAS, welcome to the Math Club. My name is Eric, and I'll be your leader. Fortunately, that's not exactly what I mean. I was thinking more in terms of learning options. I sometimes get emails from people who have never traded a spread or even a covered call, but they dive straight into speaking about iron butterflies, iron condors, and ratio spreads. One question that I ask everyone who emails me is, how long have you traded options? If someone new to trading asks me about complex strategies, then I'll ask them about the basics. Do you remember learning mathematics as a child? May have been a while for some of us, but you were taught addition before you were taught multiplication. Sure, you could learn multiplication just by memorizing the multiplication tables and accepting that 9 times 9 equals 81. However, when you were taught addition before multiplication, you had a core understanding that would support your learning even if you forget the multiplication tables. You might forget that 9 times 9 is 81, but if you remember that 9 times 8 is 72, then you can simply add 9 to 72 to get to the right answer. Having a core understanding of addition means that you can learn multiplication with a deeper understanding. That's the same with option trading. When you understand basic credit and debit spreads, which is exactly what we talk about on this show, you can learn how to create the complex trading strategies that can increase the likelihood of a profit. All of my coaching students can attest to this. Once you have an understanding of the basic spreads, we can explore all of the complex strategies. If you're still struggling to wrap your mind around the spreads that I share on this podcast, send me an email or even watch the free videos that are on my website and also posted on YouTube. I'm happy to answer any questions, and I love hearing from listeners. And you should definitely expect me to ask you, how long have you been trading options? All right, let's get into the trade review from last week's trades. We're going to start off with our covered call on SoundHound AI Inc., symbol S as in Sierra, O as in Oscar, U as in Uniform, N as in November. At the time, the stock was trading for $3.66 per share. I looked at buying stock and selling the July 4 call at 30 cents, which could give us a return of 17.49% in 4 weeks. Well, shares of SoundHound grew 89 cents, ending the week at $4.55 per share. The call option we sold gained 50 cents, leaving us with a net profit of 39 cents on the week if we were to close the trade immediately. Now, if we leave the trade open for 3 more weeks, our profit will nearly double, moving to 64 cents, and that's without making any adjustments at all, assuming stock stays above $4 per share. Now you could choose to roll the strike higher to capture more of the stock move. This also works well if your goal is to keep the stock and just continue selling call options against it. Sometimes people sell covered calls against shares of stock that they want to or intended to keep. And there are so many ways to keep your stock, even if the stock goes higher and that call option gets more expensive, it's okay. You just have to make sure that you do the math and confirm that the adjusted trades or any adjustments that you make have better profit metrics that are worth the additional risk. If you choose not to make an adjustment, this trade is still a winner thus far, and you'll most likely lock in the original 17.49% return on capital if the stock remains above $4 per share over the next 3 weeks. Next up, we have a credit spread on Snap Inc. Symbol S as in Sierra, N as in November, A as in Alpha, P as in Papa. At the time, the stock was trading for $10.82 per share. I looked at selling the July 10.5/10 put spread at 16 cents, which could give us a maximum possible loss of 34 cents per spread. Now, shares of Snap picked up $1.01, ending the week at $11.83 per share. The out-of-the-money put spread that we sold is now even more out of the money, which is great. We could close this trade out right now and lock in a gain of 13 cents. Now, given that our maximum gain was 16 cents for this trade, I am totally in favor of doing this. Waiting 3 weeks to capture another 3 cents maximum gain on the trade is not the best use of money, the best use of your capital. It's not the best risk management overall. And for that reason, the main adjustment I would look to make is closing the trade. So take the win and close this risk out 3 weeks early. I'm looking at doing that. It's a nice trade. I'm happy. Final trade from last week was a debit spread. We looked at Pinterest Inc. Symbol P as in Papa, I as in India, N as in November, S as in Sierra. At the time, the stock was trading for $26.24 per share. I looked at buying the July 25.5/26 call spread for 32 cents, which could give us a maximum gain of 18 cents, or that's a 56.25% return in 4 weeks. Now, shares of Pinterest gained $1.10, ending the week at $27.34 per share. The in-the-money call spread that we bought is now even more in the money. This trade is working out so far, and if stock remains above $26 per share over the next 3 weeks, we can look forward to that 56.25% return on capital. So no adjustments are needed at this point. Now, of course, you could extend the trade if you were really bullish, but that certainly is not needed. Take the win on this one and look forward to a nice holiday weekend. Yes, you can extend the trade from a 50-cent wide trade to a $1 spread if you like. The spread pricing is not super attractive for extending the risk to $1, but it might be worthwhile to consider adjusting to a $1.50 wide spread. It all depends on what you're comfortable with. So definitely do the math and make the decision that's best for your own portfolio. So far, so good on this trade. It's a 3-for-3 win. No adjustments are needed on this one at all. I feel like it's been a while since I had all 3 trades win. It typically leads to a shorter show, so forgive me in advance. But I'm happy. Hopefully you're happy. I'm happy. We're all happy. So let's just keep going. So this upcoming week, the U.S. will be celebrating Independence Day, of course, on Tuesday, July 4th. Markets will be closed on that day, and there will be an early close for the markets on Monday, July 3rd. So keep an eye on that. We actually have a much shorter trading week. It's like 3.5 days wide. So keep an eye on that. That can do lower activity or lower volume in trading, means that the people that are active actually can push the market in their own direction. So sometimes you see crazy things on holiday weeks. So that's why I like to point it out. Of course, we're still going to be using the July 21st expiration for options that expire in the month of July for all of the trades this week. So 3 weeks until expiration. Let's dive in. We're going to start off with the covered call on EOS Energy Enterprises, symbol E as in Echo, O as in Oscar, S as in Sierra, E as in Echo. The stock ended the week at $4.34 per share. I'm looking at buying stock and selling the July 4.5 call at 45 cents, which could give us a return of 14.06% in 3 weeks. Now you enter this trade by buying stock for $4.34 and selling the July 4.5 call at 45 cents. This trade makes the most money if stock prices finish above $4.50 per share. The break-even price is $3.89, and in real terms, the stock purchase will require $434, and you'll collect $45 for selling that option. Next up, we have a credit spread. Looking at Uber Technologies, symbol U as in uniform, B as in Bravo, E as in Echo, R as in Romeo. At the time, the stock was trading for $43.16 per share. I looked at selling the July 42 put spread at 16 cents, which could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the July 42 put at 87 cents and concurrently buying the July 42 put for 71 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $42.50. The break-even price is $42.34 per share, and in real terms, you'll collect $16 per spread that you sell and have $34 at risk. And then our final trade for this week is a debit spread on United States Steel Corporation, symbol X as in X-ray. The stock ended the week at $25 per share. I'm looking at buying the July 25 call spread for 32 cents, which could give us a maximum gain of 18 cents, or that's 56.25% return on capital in 3 weeks. Now you enter this trade by buying the July 24 call for $1.14 and concurrently selling the July 25 call at 82 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $25 per share. The break-even price is $24.82, and in real terms, you'll pay $32 to enter this spread, and your maximum gain is $18 per spread. So that's it for this week's show. Thank you guys so much for listening. Like I said, it's going to be a shorter show this week because, hey, all 3 trades from last week won. If you have any questions about how to make adjustments or even why I've selected some of these trades, shoot me an email and I'll do my best to explain. Hope you have a great week. Take care. Happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.